Have you ever wondered what makes a commercial property stand out in the bustling real estate market? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. Today we're diving into a fascinating development in New Jersey. A building located at 160 Main Street in Matawan has been sold for $2.1 million to an unnamed buyer, as reported by NJ News Report. This transaction is noteworthy because it involves a freestanding 1.5-story, multi-tenant retail and office building on a 0.64-acre property. The sale was facilitated by a team from Colliers, including Vice Chair Jacqueline Chesler, Vice President Patrick Norris, and Director Matthew Cohen. Carrie Tajfel, President at TFE Properties, represented the seller. What makes this property particularly intriguing is its development potential. The previous owners secured a zoning agreement that permits the construction of a 46-unit multifamily and retail building on the site. This new structure can encompass approximately 44,725 square feet of residential space and 3,040 square feet of retail space, along with associated parking. The property was marketed through 10-x.com, an online platform for commercial real estate transactions. This sale signals continued market growth in the area, with the potential to significantly enhance the local community's infrastructure and housing options. As we see these types of developments in New Jersey, it's interesting to compare them to trends in places like Kitchener-Waterloo or London, Ontario, where similar zoning changes can lead to multifamily developments that revitalize neighborhoods and stimulate local economies. Terreno Realty Corporation, based in Bellevue, Washington, has finalized a significant acquisition of industrial properties in Kearney, New Jersey, and Doral, Florida, for a total of $194.3 million. This acquisition is part of a broader strategy by Terreno Realty, totaling $426.9 million, focusing on strategic assets within key coastal markets. According to a statement from the company, this deal includes 3 industrial distribution buildings, covering approximately 509,000 square feet across 27.6 acres, with a current occupancy rate of about 36% among 5 tenants. This latest acquisition marks the completion of a larger multi-market portfolio for Terreno Realty Corporation, encompassing around 1.2 million square feet. Terreno Realty specializes in acquiring, owning, and operating industrial real estate, with a keen focus on 6 major coastal markets in the United States: New York City/Northern New Jersey, Los Angeles, Miami, San Francisco Bay Area, Seattle, and Washington, D.C. This strategic move highlights the company's commitment to expanding its footprint in these critical markets. From a Canadian perspective, the industrial real estate market in regions like Kitchener-Waterloo and Cambridge, Ontario, has also experienced significant growth and investment. These areas are becoming attractive for industrial properties due to their proximity to key transportation routes and growing economic hubs. While the scale might differ, the cross-border relevance is evident as both regions leverage their strategic locations and infrastructure to attract industrial investments. Pro Real Estate Investment Trust has completed a significant portfolio sale, shifting its focus from retail properties to industrial buildings. This move is part of Pro REIT's strategy to transition into a pure-play industrial real estate investment trust. According to CoStar News, Pro REIT sold 12 retail properties across Atlantic Canada. The properties include locations such as Halls Creek Plaza at 125 Main Street in Moncton, New Brunswick, and 87 Warwick Street in Digby, Nova Scotia. This strategic shift comes as industrial real estate continues to gain traction, driven by the increasing demand for warehouse and distribution facilities. The transition aligns with broader trends observed in the real estate market, where investors are increasingly drawn to industrial properties due to their potential for higher returns and stability compared to traditional retail spaces. In the Kitchener-Waterloo and Cambridge regions of Ontario, similar trends are evident as industrial real estate sees growth, supported by the area's strategic locations and robust infrastructure. Investors are capitalizing on the increased need for warehousing and logistics operations, particularly given the region's proximity to major transportation routes. This mirrors the shift seen in Atlantic Canada, reinforcing the cross-border relevance of industrial real estate as a lucrative investment opportunity. The move by ProREIT to divest from retail and concentrate on industrial assets reflects a broader industry pattern, with many real estate investment trusts reevaluating their portfolios in response to evolving market demands. By focusing on industrial properties, ProREIT positions itself to better capitalize on the growing e-commerce sector and the associated need for efficient supply chain infrastructure. Now let's take a look into an interesting development concerning Ares Commercial Real Estate Corporation, as reported by MarketBeat. The company, listed on the New York Stock Exchange under the symbol ACRE, has received a consensus rating of reduce from analysts. This follows one analyst issuing a sell recommendation and 5 others issuing hold recommendations. Despite the reduced rating, Ares Commercial Real Estate Corporation is set to pay a quarterly dividend of 15 cents on October 15th, which represents an annualized yield of 13.6%. This dividend announcement is certainly noteworthy for investors who are considering the income potential of their holdings. Institutional investors have been actively adjusting their stakes in ACRE, with notable increases from firms like Cura Wealth Advisors, LLC. This indicates that while the consensus recommendation is reduce, there is still significant investor interest in the company. Cura Wealth Advisors, for instance, boosted its stake by 32.1% in the first quarter, highlighting a strategic move by some investors to increase their holdings in the real estate investment trust. The stock opened at $4.42 recently and has a market capitalization of $243.14 million. It's important to note that the company has a price-to-earnings ratio of -13, which might be a point of concern for some investors. The stock's 52-week range is between $3.35 and $7.49, showing some volatility in its trading. Ares Commercial Real Estate Corporation specializes in originating and investing in commercial real estate loans and related investments across the United States. The company provides a range of financing solutions for owners, operators, and sponsors of commercial real estate properties. This includes senior mortgage loans, subordinate debt, preferred equity products, and mezzanine loans, among others. It's interesting to compare the performance and strategies of Ares Commercial Real Estate in the United States with opportunities in Canadian markets like Kitchener-Waterloo and Cambridge, Ontario. Investors in these regions are also focused on commercial real estate, leveraging strategic locations and robust infrastructure to attract investments. Such cross-border comparisons highlight the universal appeal and potential of commercial real estate as a lucrative investment avenue. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.